Good day, Grade 12 learners. This presentation covers an aspect of analysis and interpretation of financial statements related to companies. The aspect it's going to cover is profitability and operating efficiency. Profitability and operating efficiency. Now, when analyzing the financial statements of a business, and in this case of companies, one needs to look at what question does this particular aspect answer. When we're looking at profitability, the question it answers is the company efficient in its normal operating activities? How efficient is the company in its normal operating activities? And so whenever a question asks you about the profitability of the business, you will be looking at the efficiency of its operating activities, its normal day-to-day operations. In other words, a business is about selling, buying goods, selling the goods, and the expenses and the income that it incurs in its operating activities. So, when you ask about profitability, you need to look at how efficient is the company in its operating activities or in its normal operations. So that's the first important thing. The second thing is, when discussing profitability, you need to know where to find the information. And in the case of profitability, the information will all be found in your income statement, will be found in the income statement. Right, if we look at the first thing in terms of profitability, one of the key aspects is the markup percentage. Now, I want you to look at this question below. It says the markup percentage improved from 50% to 75% this year. Now, if you look at that, it sounds good because we have a higher markup. And so the directors should be very happy with this. But I want you to think carefully about that, because we cannot really make that statement from this information. Just the fact that the markup increased does not mean that everything else was good. Okay, so the thing is, we need to look at more information. Now, I want us to look at this here. Here we have some more information. The markup improved from 50 to 75%. Can you see that? Last year it was 50, this year it's 75. But now let's look at what happened to our sales. Our sales went from 150,000. Can you see it's gone down to 70,000? Now, what could have happened was, because the markup increased, the prices were higher, and so your clients were not prepared to pay the higher price. Hence, your sales went down. And because your sales went down, can you see what happened to your gross profit? Your gross profit also deteriorated. So in this case, would the directors be happy that the markup had increased? I think not, because they have made less sales, and as a result of that, less profits. So, the key to financial indicators is, and to analysis and interpretation is, we need to compare something else. We need more information, okay? And the best way to do this is with a ratio or percentage, and these we call financial indicators. Hence the calculation of financial indicators, because now we can compare. In the same way, if we say the operating profit was 200,000, the director should be satisfied. We don't know if they should be satisfied, because we only know what the operating profit was. We don't know what the net profit was. We don't know what the markup was. We don't know what the sales was. And so it's important that we have more information, hence the fact that we calculate financial indicators. Now we're going to look at, if we're wanting to talk about profitability, we need to calculate some financial indicators. And the financial indicators that we would need to calculate would be the percentage gross profit on cost of sales, in other words, the markup percentage, or the gross profit on sales or turnover. Remember, another word for sales is turnover. So if I say calculate the percentage gross profit on turnover, I'm also meaning you must calculate the percentage gross profit on sales. We need to look at our operating profit on sales and also our operating expenses on sales. So those are your financial indicators that's relevant to the concept of profitability. Now, if you look at these financial indicators, often what puts learners off calculating financial indicators is the fact that they think they have to study it. I want to tell you, learners, you really don't have to study these, because the way you're going to calculate it, or the formulae, is in the financial indicator itself. If you look at percentage gross profit on cost of sales, that is how you're going to calculate it. Firstly, because it's a percentage, it will be times by 100 over 1. You know that. And they're asking you gross profit, so you will take your gross profit and you'll put it on your cost of sales. Let's see. So you don't have to study it. It is percentage, so it's times 100 over 1. It is gross profit on cost of sales. Gross profit over cost of sales. And so you can take each of these indicators. Percentage gross profit on sales, percentage times 100 over 1. Gross profit on your sales, and you do the calculation. Same with operating profit, and the same with operating expenses. So learners, I would like you to find some activities and to calculate these financial indicators for profitability. Remember, you don't have to study them. Look at the indicator and then you write it out based on what the indicator is asking you. Good luck with your calculations of your financial indicators related to profitability.